Yo, before this video starts, I just want to start this off by saying join the free Discord down below. It is linked down below. Peace. Yo, what is good, YouTube? We are back with another video. We're going to be going over entry checklist. We're going to go over the 7 checklists that I have to have before I click that buy or sell button, and why you have to have one. If you're not using an entry checklist, if you don't have a reasoning for if this happens then I do this, and if this happens then I'm not going to do this, if you don't have this, you're just randomly entering trades and you're not going to have a set risk to reward, you're not going to have a set win rate, right? Because you're just randomly entering, right? So if you're trading ICT concepts, you have to have a checklist on a reasoning and a thesis on why you are entering these trades, right? So we're going to be going over these checklists, and we're going to go over the 4 trades that I took this week, 3 wins and 1 loss. We're going to go over those 4 and see if they all met the criteria on this checklist, right? So for my entry models, for me to enter a trade, this is what it has to do, right? So every day that, or let's say Monday, every time I get onto the charts, I will start by identifying the higher time frame bias, right? Internal to external liquidity. I identify this higher time frame if we are delivering from internal liquidity or if we're delivering from external liquidity. So if it's vice versa, if we're going from external to internal or internal to external, right? So I start off by the monthly and the weekly, then the daily, right? Whenever all 3 of these time frames line up, that is your highest probability trades you will take, right? So I start off by identifying the higher time frame monthly, weekly, and daily biases. Okay, so that happens every Monday. Now every single day I will check the daily chart, right? Because I remember Tuesday to Friday what that weekly and monthly chart, where it wants to go. So after I do that, I identify every single day the daily PD arrays, internal to external liquidity. Where are we drawing to? Where are we delivering from? So where is that daily candle wanting to expand? If I can't identify where that daily candle wants to go, I don't take a trade. So after I identify that daily PD array, where we have entered or where we are going or where we are delivering from, then I go to the 1 and 4 hour chart and I identify the structure. So if we are delivering from a bearish fair value gap, I want to see a 1 or 4 hour market structure shift, right? So if we're delivering from a weekly, then I'll go down to a 4 hour chart. I have to see that 4 hour shift in market structure. If we're delivering from a daily bearish fair value gap, I need to see a 1 hour bearish market structure shift, and vice versa for bullish, right? So after doing that, I have to see the PD arrays on the 1 and 4 hour chart. So after that shift in market structure, are we then in New York session? So let's say we shifted in London session. Is New York session coming into that bearish internal liquidity to where I can then get a setup to target that 1 hour external level? And then if that lines up, the daily and weekly, let's say the daily's already delivering from that bearish fair value gap. So I'm already going with the bearish bias. So after that, after that point of interest is hit, I identify the lower time frame market structure. So after it is hit, identify that lower time frame market structure shift. So if I'm on the 1 hour chart, time frame alignment, I will then go to the 5-minute market structure. So I'm looking at 5-minute market structure if it's delivering from an hourly imbalance. 4 hour, I'll go down to the 15-minute. Yeah, there is some cases that I'll go from the 1 hour to the 15-minute or 4 hour to the 5-minute, but it's all based upon context, right? But if you're just starting out, you should just be looking for that time frame alignment. So 4 hour to 15-minute, 1 hour to 5-minute if you are just starting out. Now, after I identify the lower time frame structure, I'm looking for SMTs. Every trade I take has to have an SMT, right? That is where expansions happen. the expansion and high probability reversals will happen from SMTs, or continuations will happen from SMTs. Then I go for that lower time frame entry, order block, fair value gap, breaker block. Those are the only ones that I use. Sometimes I will use a mitigation block, but usually it's already paired up with a fair value gap. So if I'm looking at a mitigation block, it has to displace through it with a fair value gap. So I'm already just entering off that fair value gap anyways, so the mitigation block doesn't really matter to me. And every trade I take must be a 2R. I do not take anything less than a 2R because it just doesn't make sense to me. So now that we've done this, let's go over all of these trades, and you'll see that most of them are the exact same thing. So right here on this gold trade, what do we see right here? We have that higher time frame SMT. So now we have an SMT with silver. Gold held this 1 hour fair value gap. We get our market structure shift right here at this high, right? But there's no fair value gap yet, so I'm waiting. Nothing to do yet. We come up. We also form a 1 hour order block that we tap right here, but I'm not taking an entry on this 5-minute order block because I didn't see a run on sell stops, right? So everything must be aligned. Right here we get that run below an old low, creating what? This is where I'm using advanced market structure. We create an intermediate term low, or I'm anticipating this becoming an intermediate term low. So right here when we close above this candle's body's open, that is now a plus order block. I take my entry right here, risk off the bottom of this candle, and what do we see here? I enter at 54.4, my risk is 50.5, and my target is 62.2, a 2R trade, right? So I'm risking 4 points or 3.9 points, and I'm going for 8 points. So right there, just a slick 2R. Simple, very simple trade. Next trade, NASDAQ. This is when we're at all-time highs here. So it's harder for the 1 hour and 4 hour PD arrays because we're all the way up here. But this is where you use other concepts, right? What do we see here? A consolidation, right? After a huge move higher, right? We're at all-time highs. What can you do from this consolidation? Reverse. You can't do this. So this is now manipulation, right? So we have a power of 3 model setting up, right? And you also always want to be marking out the midnight open, right? You want to be buying lower or close to midnight open and shorting above or close to midnight open, right? But you can't really see midnight open on my charts because on gold it was all the way down here, and NASDAQ I don't think I even marked it out on this day. But anyways, power of 3 consolidation, boom, manipulation right here. SMT ES takes this low, displacement higher, market structure shift, come into here, and I don't know if this was a 2R. I think it was a little less than a 2R, but you take what you're given at all-time highs, right? This is a high probability trade because we are at all-time highs. I'm going with order flow, so it's a high probability trade. So right here, very simple trade. Literally a few things marked off on my chart. 1, 2, standard deviations 3, and this high 4. 4 things marked on my chart. That's it. Next trade, gold. Right here, this expansion higher, we come down into a discount. I guess I should have added that onto my chart, but premium and discount is always what's the word? I can't think of the word I'm looking for, right? So you can add it right after 1 and 4 hour structure. Did it come into a discount in that PD array, right? But right here on this move higher, we come down into a discount. We come into a 15-minute fair value gap, right? And then we get this displacement higher. This can be your market structure shift at this short-term high, fair value gap, inverse fair value gap. I enter on the inverse. I risk off this low. Why? Anticipation of an intermediate term low being formed. boom, deliver for a 2R. And I actually recorded this as a live trade. It's my last video up on YouTube, right? But I do use premium and discount on the higher time frames to see if we have reached a premium or a discount. You don't have to use it, but I do use it. So I just forgot to add it, honestly. So right here, oil, my only loss for the week. Everything lined up. Right here, displacement through. Right here, hourly fair value gap. We come down into that hourly fair value gap. We have a stop run below a low. We get displacement through a high, creating our market structure shift. I enter in the fair value gap, and I was looking for this high. Didn't work out. There was no SMT here. I failed to realize no SMT. But as you see, we just chopped out the entire rest of the day, which is totally fine. I think it was a $210 loss. So right here, my only loss. But what do you see throughout all these trades? They are all very similar trades. And that's what you have to be doing, right? Taking very similar trades. They all should almost look exactly the same. So a 75% win rate this week, and I'm pretty green. So if you do not have an entry checklist, you have to create one, right? Once again, identify that higher time frame bias, internal to external liquidity or vice versa. Going from the monthly to the weekly to the daily, identifying the bias. Identify those daily PD arrays and where the daily candle wants to expand. If we're coming into internal, if we're targeting internal and we just delivered from an external level, identify the 1 to 4 hour structure and PD arrays that are points of interest. Identify if that 1 or 4 hour is in a premium or a discount. And then after that POI is hit, identify that lower time frame structure, the 5-15 minute chart. Do we have SMT? Cool. Everything lines up. Lower time frame entry, a fixed 2R, or we go for a low or a high, or we go for that internal liquidity. It's that simple, right? I'm not looking for much. I'm looking for all the time frames to align together and then identify if we're going into internal or going to external liquidity. It is just like that. So if you don't have an entry checklist, create one. I'm telling you, it will help a lot in identifying your win rate and identifying your RR. So drop a like on the video, subscribe if you're new, and I'll see you guys in another video. Join the free Discord. It is linked down below.